Here are 5 news stories from the world of the crypto industry. First, news. Top 3 crypto strategies for long-term investors. For most of its existence, the cryptocurrency market has been defined by short-term trading strategies aimed at profiting from high volatility and sudden market shocks. However, with the arrival of institutional investors and a shift in thinking about cryptocurrency as a new asset class, the market situation is changing. Now, more and more investors see cryptocurrency as part of a long-term and diversified portfolio. For such investors, there are 3 most popular investment strategies that can help benefit from investments in digital currencies. The buy and hold strategy. The simplest approach to investing in cryptocurrency is the buy and hold strategy. You buy one or more cryptocurrencies that you like and hold them for a long time. The idea here is that many leading cryptocurrencies predominantly appreciate in the long term, even if they are prone to high volatility in the short term. Bitcoin is undoubtedly such an asset, with a market capitalization reaching $1.3 trillion. It is the first cryptocurrency to attract the attention of both individual and institutional investors. And there is a good reason for this. Over the past decade, Bitcoin has become one of the fastest growing assets in the world. And, of course, the key point here is a commitment to a long-term investment period. The famous Cathie Wood of ARK Invest recently stated that those who buy Bitcoin now and hold it for at least 5 years will likely make a substantial profit. She also predicts that by 2030, the price of Bitcoin could rise to $1 million. Thus, this 5-year holding period is particularly significant for anyone thinking of becoming a crypto millionaire. Position averaging strategy. While the buy and hold strategy implies one large transaction, the position averaging strategy is suitable for investors who do not have a large sum but want to profit from the growth in cryptocurrency value. This strategy involves a series of small, but recurring purchases. The key idea here is that the investor buys a certain cryptocurrency for a fixed amount on a regular basis, regardless of market conditions. For example, buying Bitcoin once a month for $100. This strategy can be especially effective for those who want to eliminate emotions from investing. Instead of checking their balance every day, it will be enough to look into the portfolio once a month. Spot ETF funds. For investors who are not ready to invest directly in digital assets, special funds focused on cryptocurrency have been launched. Approved in January of this year, spot Bitcoin ETFs have truly been a revelation. The 2 most popular spot Bitcoin ETFs at the moment are the iShares Bitcoin Trust and the Fidelity Wise Origin Bitcoin Fund. Given the initial success of spot Bitcoin ETFs, it is expected that other cryptocurrencies will soon have their own spot ETFs. For example, the same Wall Street investment companies that brought spot Bitcoin ETFs to market are trying to introduce new spot ETFs for Ethereum. The U.S. Securities and Exchange Commission has already preliminarily approved their launch. The key idea of such investing is diversification. Simply put, a trader buys a share of the fund instead of its 20 components. Thus, ETFs can be very useful if the investor is confident in the long-term potential of the industry but doubts its leader. Second, news. The launch of spot Ether ETFs will create another line of defense for Bitcoin. The co-founder of American software development company MicroStrategy, one of the largest public holders of Bitcoin, stated that the approval of spot exchange-traded funds for Ether is a good event for the first cryptocurrency. Michael Saylor said on the show what Bitcoin did that the emergence of spot ETFs will lead to more investors recognizing cryptocurrencies as a legitimate asset class. Is this good for Bitcoin? Yes, I think it's good for the first cryptocurrency. Spot ETFs will serve as another line of defense for Bitcoin. The head of MicroStrategy believes that investors will distribute their capital among different cryptocurrencies, but Bitcoin will still remain a leader in attracting funds. Michael Saylor admitted his mistake in a past prediction when he claimed that the likelihood of approval for spot exchange-traded funds for Ether in the US was 0. Now the businessman is confident that the crypto industry has become even more influential than before. Third, news. 60% of American crypto investors do not understand blockchain technology. According to a survey by the American educational platform Preply, 60% of cryptocurrency investors do not understand the basics of blockchain technology. Approximately 40% of surveyed Preply crypto investors from Generation Z are not confident in their basic knowledge of cryptocurrencies. This lack of confidence is even more pronounced among millennials, 35%, and Generation X, 32%. At the same time, people from Generation X have the highest percentage, 57%, of those who want to learn more about virtual assets. Among Generation Z, only 41% are willing to study blockchain technologies. The authors of the study claim that interest in digital assets other than cryptocurrencies also varies depending on the generation. 12% of surveyed millennials have invested in non-fungible tokens, NFTs, at least once, while only 4% of the older generation, baby boomers, have invested in NFTs. U.S. residents who have invested in collectible tokens tend to invest in other virtual assets as well. According to the authors of the study, this is the first step towards studying other digital assets. Previous research results by the Federal Reserve System of the United States showed that over the past year, 18 million adult Americans, 7% of the population, have invested in digital assets. Fourth news. Paraguayan authorities confiscated about 600 mining equipment units from local residents. Employees of Paraguay's National Electricity Administration, AND, and the police in the city of Salto del Guaira conducted a joint raid in search of illegal connections to the power grid of a mining farm in the department of Canindeyú. Energy workers and police found the farm and confiscated 2 transformers of 1,000 kVA each, plus 176 devices for Bitcoin mining. An ANDE representative reported that this is the second consecutive large confiscation of mining equipment triggered by electricity theft and illegal digital asset mining. A few days earlier, the Paraguayan authorities confiscated 396 ASIC miners along with other equipment in the Department of Paraguay. The official noted that the Paraguayan Senate is expected to pass a bill regulating mining and cryptocurrencies soon. The law provides for prison terms of up to 10 years for illegal miners while giving ANDE more tools and powers to combat electricity theft. Fifth news. Court approves resumption of BitGo's $100 million lawsuit against Galaxy Digital. The Delaware Supreme Court has ruled that cryptocurrency custodian BitGo has the right to resume a $100 million lawsuit against Galaxy Digital, writes CoinDesk. The case concerns the failed $1.2 billion merger of the companies, which could have been the largest deal in the history of the crypto industry. However, Galaxy Digital terminated the agreement, stating that BitGo did not provide the necessary financial statements in time. In response, the custodians sued the company and demanded $100 million in compensation. The Delaware State Court in 2023 dismissed BitGo's lawsuit, considering that Galaxy Digital had the right to cancel the deal and did not violate U.S. laws. A higher authority reviewed this decision. The state Supreme Court considered the term financial statements mentioned in the merger agreement to be ambiguously formulated. Both companies provided documentation that falls under this definition, the ruling says. We believe that justice has prevailed on appeal, and we are pleased to continue this case, said R. Brian Timmons, a partner at the law firm Quinn Emanuel, representing BitGo's interests. Galaxy Digital noted that they will continue to defend their position. The company is confident in the validity of the decision to reject the deal and intends to continue defending itself in court. Earlier, it became known that Galaxy Digital plans to create a $100 million venture fund for further investment in the digital assets sector. The main focus will be on financial applications, software infrastructure, and crypto protocols.